Hello, today is August 12th, 2017. My last call said I was reluctant to make any long predictions in an environment like this, but the commonest thing would be for a gap up at Friday's open, which happened. I said there was support at Thursday's low, which held. I said there was a target here, and that if we gapped over this high, we could hit it, but such a gap didn't happen. We were looking for a pattern with an early high, which we got. I believe Monday's pattern will also be one with an early high. If the middle of the day's high is higher, market has a tendency to rally into the close, and if it's lower, it tends to drop into the close. Here were the MEJT calls that said ultimately lower prices would print, that rally was false. They did print. Here's your target. We usually get more than the minimum, which we did. Here it gave a sell signal, and after moving in the other direction, which the system marked as false, we got the lower prices. No new MEJT targets. This is a pattern which typically closes at the day's high, unless we invalidate this by having a gap up Monday and promptly going over this high. It's a very negative pattern. Unless we get such a gap up, lower prices should print. Let's look at the chances of such a gap up happening. Let's look at the big picture first. If I can get this to, here we go. Here's the big picture. The market was having a recovery. Friday, breadth continues to plummet. Fewer and fewer stocks are willing to participate. Just a few days after the market hit an all-time high, new highs minus new lows was hitting months-long lows, if not years-long lows. It's a very negative pattern when the market was going straight up and fewer stocks participating in it. Here was Thursday's close. I said yesterday, or Thursday night rather, that we should see a return to this trend line. We saw a return to that trend line, which is resistance, and then dropped. It's a very negative pattern. It can be invalidated if we gap up Monday, but otherwise lower prices should be coming, and probably much lower. I haven't shown this chart in a few months because I had points 23 and 25 a little bit earlier, but I don't think it changes anything. This is the three peaks in the domed house pattern. I don't think it's happened enough to put a lot of credence in it, but George Lindsay was a pretty smart guy. He says after point 25 prints, the house should collapse. First, we should see point 20, which is 23.52.72, recover to point 15, and then collapse to point 10, which is way back at 1810.10. Here's your three peaks, your corrective wave, sharp decline. There's your point 10, 1810.10. And here's the domed house. So that puts us in the 2350s. This is the market right before the election of President Trump. This is the weekend before. Here's your wall. Here's your hole in the wall gap. These things fill. This gap should fill at some point, and that puts us under 2100. Well, here's the wave count. There's your 3, there's your AB. I'd like to see wave C have some Fibonacci relationship to wave A, it gives us a number of targets. Now there were a number of failed MEJT targets on this rally, but the odds are overwhelming. We're going to see all of them or almost all of them. Before the rally started, from September of 2013 to February of 2016, these were all of the failed targets, and we get about 650 targets a year. On average, there might be 2 or 3 MEJT targets which haven't printed in a given year. And let's not forget, MEJT leaves a failed target at a major change in trend as a part of the system. So whether you want to call those failures or additional signals, that's a question of semantics. But we have 1810 as Lindsay's target, would make this one fill, and that means all the MEJT targets before February 2014 would have printed, and I don't think these numbers in the 1700s are out of reach. It won't happen tomorrow, but this is a very negative pattern. It looks like much lower prices are coming, and unless we cap up and take out this high promptly, we should start to see those lower prices on Monday. And that's today's call.